My dear students, today let's see the basic of accountancy part 2. Journalization under double entry system. Journalization, there are two methods for making journal entries. The first one is golden rule. According to the golden rule, there are three accounts. It is classified under three categories. The first one is personal account. Under personal account, debit the receiver, credit the giver. For example, if you pay any amount, who is the receiver? So the receiver account should be debited. But in his book, he will debit our account because we are the giver. So debit the receiver, credit the giver. Personal rule. And then real account. Particularly, it is dealing with assets. Debit what comes in, credit what goes out. For example, if you purchase a car, so car account should be debited because car is coming inside. Credit what goes out. Our cash is going out. So, according to real account, debit what comes in, credit what goes out. Under nominal account, debit all expenses and losses, credit all incomes and gains. If you pay salary, salary is an expenses. By cash, if you are paying salary by cash, salary accounted to cash. So debit all expenses and losses. Salary is an expenses. So salary is to be debited. Cash is going out. In this case, we can apply the real account. Credit what goes out. That means cash is going out. Salary account debit to cash account. So credit, according to nominal account, credit all incomes and gains. For example, if you receive any commission or interest received, that means cash account debit because cash is coming. Commission means in terms of cash you are receiving. So according to real account, debit what comes in. So cash is coming inside and then credit all incomes and gains. That commission received account is to be credited. Understand? So it is one type of rule, that is golden rule. Another type of rule, I mean equation method. Under equation method, the total transaction ought to be classified into assets, expenses, capitals, income and liabilities. We have studied in the previous class also. So if asset increases, it's to be debited. If assets decreases, it's to be credited. Expenses, if increases, it's to be debited. If expenses decreases, it's to be credited. And then capital increases, is to be credited. Capital decreases, is to be debited. Income increases, is to be credited. Income decreases, is to be debited. Liabilities increases, is to be credited. And liabilities decreases, is to be debited. So by using these two methods, we will check and we will pass each and every journal entries. For example, the first transaction is Mr. Kumar started business with cash rupees 1 lakh. Here, started business. Started business means the capital involved. There are two types of transactions. First one is cash and then capital. Here, if we use the golden rule, for example, if we use the golden rule, cash account, debit, if you start the business, as far as the business is concerned, cash is coming inside. So, debit what comes in. So, cash account should be debited. Understand? Whatever the capital, according to golden rule, the capital account is to be classified under personal account, credit the giver. But in this case, he has invested amount in the business. So, with his name, we have to use. That means Kumar's capital account. So, Kumar's capital account. How much amount? 1 lakh rupees. 1 lakh rupees. We have to mention the date. For example, 1st January. And the narrations we have to write. I mean, Kumar started business. It's enough. We can check in this method. Under equation method, the same result will be coming. For example, cash. Cash here it is an asset. If asset increases, because if we start the business, cash coming inside, it is increasing, asset increasing. If it is increases, it is to be debited. So cash account is debited. And then Kumar's capital account. Here capital account. If capital also increase, the capital increases, it is to be credited. So Kumar's capital account is credited. Understand? The proprietor can start the business not only with cash but also with the stock and machinery. At that time, what we have to do? Cash is also an asset, stock is an asset, and then machinery is an asset. So the same type of entry, but it is a compound entry. The like for example cash account debit, stock account debit, machinery account debit to Kumar's capital account. That means cash 1 lakh, stock 50,000, machinery 50,000. So the total capital account is 2 lakh. So Kumar started business with cash, stock and machinery. That is a narration. You can write it like that. So in this case, cash is an asset. Cash debit, what comes in, cash is coming. Stock, what comes in, stock is coming. So machinery also, it is an asset. Debit, what comes in, so machinery comes in. To Kumar's capital account, credit the giver, that is personal account. So under golden rule, the same rule, same entry. In this equation method, cash, stock, machinery, all the three are asset. All the assets has been increased. Here, if asset increase is to be debited, so cash is also debited, stock also debited, machinery also debited to Kumar's capital account. Capital also increased. According to the under equation method, if it is increased, it is to be credited. So Kumar's capital account is credited. And 5, cash deposited into bank. That means if any transaction containing both cash and bank, that is contra entry. First you have to remember. And then under golden rule, there are two effects here, cash and then bank. Bank here, if we deposit, bank is the receiver. So it is a personal account rule you have to apply. And then cash is going out. It is real account rule we have to apply. So under real account, cash is going out. So cash is to be credited. Under personal account, bank is to be debited. So entry is Jan 5, bank account debit to cash. We have to mention like that. C, contra. The amount is 10,000 rupees. Amount deposited into bank. It is a narration. Under equation method, both are cash, cash and bank both are assets. Here bank balance under equation method, bank balance is increased. Cash balance is decreased. That means if asset increase is to be debited, here bank balance is increased, so it is debited. Cash is also an asset. So asset decreases. Asset decreases means it is credited. So cash is asset, it is decreased. So bank account debit to cash. Understand? Next one, Jan 7. Amount withdrawn from bank. That means it is a ulta, negative entry. Amount withdrawn means cash is coming inside and then credit the giver, bank. So cash account debit to bank. It is also contra entry. Why? Because both cash at bank, any transaction involving both cash at bank, that is contra entry. Amount 5,000 rupees. So the narration is amount withdrawn from bank. You have to write amount withdrawn from bank. You have to write like that. So cash at bank, both are assets. Here withdrawn means cash balances increases. So according to equation method, asset increases is to be debited. Here asset is cash increased, so it is to be debited. And then bank means it is also an asset, it is decreased because the bank balance is decreased, so it is to be credited. So cash account debit to bank. Jan 11, goods purchased for cash, rupees 1 lakh. There are two effects, one is purchases and another is cash. Purchases, it is an expenditure. If expenditure and then cash means it is a real account, that is an asset. Cash is going out. So under golden rule, if he purchases means debit all expenses and losses. Purchases means it is an expenses. So purchases should be debited. Purchases account debited. And then cash is an asset. credit what goes out. Under real account, credit what goes out. So cash to be credited. So how much? 1 lakh, 1 lakh. So under equation method, purchases it is an expenses, increase in expenses. So we have to debit, we debited. And then cash is an asset. Asset is decreased. Asset decreased is to be credited. So we credited. So purchases account debit to cash. Narration is cash purchases. You have to write like that, it's enough. Being cash purchases. Understand? Jan 14. Goods purchased from Jain rupees 1 lakh on credit. It is credit purchases. If credit purchases under golden rule, what we have to use it? Here the purchases mean it is an expenses. So debit all expenses. Okay. And then from Jain is a giver. Credit the giver. It is a personal account. So under personal account, credit the giver. So rule entry is purchases account debit to Jain account 1 lakh rupees. So credit purchases, it is a narration. So under equation method, purchases it is an expenses. So expenses increases, it is to be debited. Expenses increases is to be debited. So purchases is debited. And then Jain is a creditor. Creditor is nothing but a liability. We have to pay in future. So liability increases, it is to be credited. So Jain account is to be credited under equation method. 19. Amount paid to Jain rupees 99,000 and discount received rupees 1,000. Actually we purchased for 1 lakh. Now we have paid only 99,000. 1,000 rupees is discount received. It is an income. So Jain is the personal account. Now we have to pay. So now we are paying to Jain. So debit the receiver. How much we have to pay? 1 lakh rupees. So Jain account debit 1 lakh. And then cash. Cash is coming under real account. How much we are paying? 99,000. Cash is going out. Credit what goes out. So cash account to be credited to cash. How much? 99,000. The remaining balance 1,000 rupees. What is 1,000 rupees? That is discount received. If it is discount received, that is an income for us. So it is coming under nominal account. So credit all incomes and gains. So to discount received 1,000 rupees. So Mr. Jain account has been settled. That is a narration. It's enough. Jain account has been settled. Is settled. It's enough. Amount paid to Jain. So Jain here under equation method, Jain means he is a creditor. That balance has been reduced. The creditor balance is reduced. So under equation method, liability is reduced. If liabilities decreases, it is to be debited. Here Jain liability has been decreased. So Jain account is to be debited. The first one. And then to cash. Cash means it is an asset. Asset also decreased. If asset decreases, it's to be credited. And then discount received. Discount received is an income. If income increases, that is to be credited. Understand? Jan 20. Goods sold for cash. Here cash account and then sales account. Under golden rule, sales it is a revenue. Cash it is an asset. For example, it is coming under real account. So cash, if we sell for cash, that is debit what comes in. Cash is coming inside. So cash account should be debited. And then sales under nominal account, sales is a revenue. So if it is revenue, income, both are same. So credit all incomes and gains. So to sales rupees 50,000. So we can apply under this method, I mean equation method. Cash is an asset. If asset increases, it is to be debited. So we are debiting cash account. And then sales, it is a revenue. Revenue means it is a income. Income increases, it is to be credited. I mean income increases is credited. So sales is an income. So sales is credited. Cash account debit to sales. Narration is cash sales. Understand? And 21st. Goods sold to Ravi for 1 lakh on credit. It is a credit sales. In credit sales, to affect Ravi account and then sales account. Ravi, it is a personal account. It is coming under personal account under golden rule. So under personal account, debit the receiver. If we sell any commodity, Ravi is the receiver. So Ravi account should be debited. So Ravi account should be debited. I mean 1 lakh. Sales. Sales, it is an income, that is revenue. So credit all incomes and gains. So sales account should be credited to sales. 1 lakh. Credit sales to Ravi. It is a narration. Understand? Jan 25th. Cash received from Ravi rupees 99,000 and discount allowed rupees 1,000. Actually, we made a sale rupees 1 lakh. Out of 1 lakh, we received 99,000 rupees. So that is a cash received 99,000 rupees. So it is coming under real account. So real account debit what comes in. So here 99,000 rupees coming inside. So cash account should be debited for 99,000. What about discount allowed rupees 1,000? It is an expenses. If expenses according to the nominal account, debit all expenses and losses. So discount allowed is also to be debited. Discount allowed also debited 1,000 rupees. What about Ravi? Ravi is a personal account. According to personal account, credit the giver. So his account should be credited to Ravi. So how much? 1 lakh rupees. So amount from Ravi is fully settled. Amount received from Ravi in full settlement. Amount received from Ravi in full settlement. We can apply equation method. Cash is an asset. Increase in asset, because it is coming inside, our cash balances will be increased. So increasing asset is to be debited. So cash account should be debited. Discount allowed is an expenses. If expenses increase, it should be debited. So here discount allowed is also to be debited. Ravi is nothing but actually if he made a sale to our customer, actually he is a customer or sundry debtor. Now the sundry debtor is, it is an asset. Here sundry debtor is decreased, I mean asset decreased. If asset decreases, it should be credited. So Ravi account should be credited. Understand?